Ladies and gentlemen, we have some breaking news coming in. CPI numbers and IIP numbers have come in. From what I'm learning, as of now, the initial set of numbers, India's June industrial production has risen 4.2% and expected was 5.4%. In fact, consumer prices or the CPI number has risen 3.5%, and July's combined inflation rate is at 3.54% versus 5.08% that was registered in June. Inflation, meanwhile, food inflation in July stands at 5.42%, and rural inflation, meanwhile, for the month of July stands at 4.10%. This is the number for July. The number for June stood at 5.66%. So these are some of the numbers that are flashing on your screens. We'll also wait for the fine print of the numbers and more details. But let me go once again through these numbers. Food inflation in July, 5.42. CPI rural inflation number stands at 4.10 versus 5.66% in June. So clearly, rural inflation has moderated. Food inflation also seems it has moderated, and July's combined inflation rate is at 3.54% versus 5.08%. And let me go across to our guests who are joining us to decode these numbers even further. Mr. D.K. Joshi, Saugata Bhattacharya, and Kanika Pasricha. Thank you very much, ladies and gentlemen, for, of course, joining us today. I want to first understand from you, Kanika, are these numbers in line with what the economists and market experts were estimating and expecting?
So they're a tad lower. Our estimate was around 3.74. The market was close to 3.6. The number is coming at 3.54. See, what's happened is there are two areas here. Core is at 3.35, 3.4%. Prior was a record low of 3.1, where telecom tariff hikes, in our view, have played a role. We'll do a deep dive into the data. On the other hand, when it comes to food inflation, so core, we were at around 3.4, 3.45. It's coming at 3.35, broadly in line. Telecom tariff hikes, in our view, have played a role with the kind of steep hikes seen in early part of July itself. But on the other hand, it's the food inflation that has surprised us on the downside. Our estimate was around 5.3%. It's coming at around 5.06. See, veggies, sequential momentum, 14% is in line. It's food ex veggies that have surprised us a bit. So overall, I would still say it's a good number when it comes to broader inflation trend. Of course, base effects have played a role. But in the next print as well, with veggie prices now, the sequential momentum turning from plus 14 to a negative momentum, with prices falling, monsoon conditions have improved. So overall, prices also coming down. So that will also bode well for the next print as well. So good data. Thanks.
All right, so good set of data. In fact, we have some more numbers coming in as far as food prices are concerned. That number stands at 5.42%. Food and beverages prices rose 5.06%. Food, fuel and lighting prices fell 5.48%. Clothing and footwear prices rose 2.67%. Housing prices again have risen very interestingly 2.68%. Let me go to Mr. Bhattacharya. What is your assessment of the numbers that are coming in? Do you think there is comfort, as Kanika is saying, that the numbers seem good? Do you think there is enough comfort coming in through, and will this carry on to the next month as well? What is your assessment and your take on the numbers?
Thank you very much for having me on your show. I agree with Kanika. The numbers are quite good. It's even lower than my own expectation of about 3.7% headline inflation. So that is encouraging. And as you mentioned, food price inflation also seems to be moderating. So we remain hopeful that, if this trend carries on, you are going to see fairly restrained inflation numbers even for the month of August that we are in. It certainly suggests that despite increases in some items of the food basket, that the food basket in general seems to be moderating, particularly vegetables. So this is good news. Shifting a little bit, by the way, I'm a bit surprised because you remember from the RBI, the latest monetary policy, the RBI sharply increased its projections, forecast of overall CPI inflation for Q2 from the earlier 3.8% to 4.4%. I was a little worried that our inflation numbers for this month would come in higher, but fortunately it's not. So this is good news. The other little bit of a disappointment is the IIP number at 4.2%, which is fairly low compared to our own forecast of 5.1%. But that's a separate matter, and that needs to be looked at carefully.
Right. Mr. Bhattacharya, we'll of course be delving a bit deeper into IIP numbers a little later, but let's for the moment stick to CPI numbers. Let me go to Mr. D.K. Joshi. Mr. D.K. Joshi, RBI governor had earlier stated that inflation is moderating, but it's not at the pace at which it should be. Is there case for further caution, and what do you really expect in terms of rate cuts? Will they come in this calendar year or this fiscal year?
First of all, I think this decline in inflation is largely base effect driven, and RBI is going to look through it. Although I think inflation has come in a little down a little sharper than was expected. Do remember that during the month of July 2023, the vegetable and food inflation was extremely elevated. So this is largely base effect, and I think the prices, particularly of vegetables, don't seem to have come down to that extent. I mean, as the inflation rate has come down. So that's number one. And as far as the central bank is concerned, I think there are two things that influence rate cuts. One is what the global stance is, and there I think the major central bank in the world, the Fed, is veering towards a rate cut by September. So, and our other central banks have already cut rates. So you are in a situation where the stress that comes from high interest rates in the West is going to reduce a bit. And domestically, I think we need to watch out for how the inflation plays out. And I think our assessment is that even though inflation is low right now, it's going to pick up in the second half again when the base effect dissipates. So I think you need to watch monsoons very carefully and the weather events in general. And if food inflation comes down, which we believe will come down with the projection of normal inflation on a durable basis, then we should see a rate cut as early as October, because as I said, the influence of major central banks on monetary policy will reduce, because I think they will be cutting rates. And domestically, I think the food is the major hurdle. All other inflation indicators are quite soft.
All right. Other indicators of inflation are quite soft is what you're saying. In fact, the RBI governor during the MPC meeting speech after that, he said that we need to carefully monitor mobile tariffs and milk prices, because remember, milk prices have been a concern. Pulses and cereal prices have also been a concern. Vegetable prices, especially that of tomato and potato, have been a concern as well. But that number coming in rather low. I want to come to you, Kanika. Now, of course, Mr. Joshi is stating that the rate cuts should happen in the next few months. What is your take on when the RBI will feel comfortable, taking that kind of a rate cut? We've of course seen, consistency as far as maintaining that rate stance is concerned. But there are concerns, like Mr. Joshi was stating, that this is due to a low base effect and that there could be further escalation in inflation in the coming few months. So what is your opinion on RBI rate cuts?
So 3 points here, Sumita. See, first and foremost, agree with what Mr. Joshi talked about, that RBI is willing to look through base effect-led decline in inflation levels. Even if, as Saugata said, completely agree with the kind of numbers we've got, they may see some undershooting from 4.4% for the quarter to maybe closer to 4% or slightly lower there. But the key point to note over here is, when we talk about rate cuts, they would want to watch out for how does food inflation pan out when the harvest season happens. We still see flooding in some states. The distribution for that 6% surplus monsoon is still highly uneven. So the food inflation trends need close watch. That's one. Second, when it comes to our own monetary policy reaction function, of course, inflation will play a role, but if growth levels are holding up, that may give some space for the MPC to delay rate cuts. In fact, the other segment on which the RBI governor spent some 5 to 10 minutes this time in the MPC, in the MPC decision or his statement was financial stability. And what we actually see is this is one area where deposit growth lagging credit growth and CD ratio staying consistently high. And it's a concern that the governor highlighted can be structural for some banks as well. Until and unless this CD growth wedge actually closes and growth is relatively holding up, the governor may use it as an opportunity to delay rate cuts. That's second. Third, while the US Fed is expected to start the rate cutting cycle in September, they may prefer a gradualist approach. And see, when they hike rates, they hike by 550 basis points, we hike by 250. So when we hiked by less than half, even if the US Fed starts cutting rates by September, we may still have some time to wait and watch, especially if recession concerns in the US don't gain momentum and they just adopt a gradualist approach. So if all three conditions turn out to be true, we're not looking at rate cuts as of now in this financial year, specifically looking at that financial stability gap, unless and until A, we see recession concerns in the US gaining momentum and some quick 50 bips rate cuts in succession, or we see food inflation, especially vegetables inflation, declining much more than our expectations because CPI ex vegetables, even in today's print, is at just 3.25%, which is still quite low. Thanks.
All right. So you are stating that, of course, that much awaited rate cut, we may face some sort of a delay as far as that rate cut is concerned. But let me come to you, Mr. Bhattacharya, once again. The economic survey suggested that, food inflation be removed from the CPI basket. Now, July CPI has come down and food inflation has also come down, but core inflation has increased. So how do you really see such a suggestion coming, and is it workable?
So RBI governor was very, very clear, as was the MPC statement, that as far as they are concerned, the rate setting body, it is the headline inflation, including food inflation, for various factors that he's laid out, because primarily the inflation expectations channel would lead to further problems if you were to start excluding food inflation, high food inflation. That's number one. So they are going to stick to headline inflation. Second, exactly as you and Mr. Joshi also mentioned, that the base effect, particularly, I'm not just talking about the food inflation effect, I'm talking about core inflation, the non-food, non-fuel. We have hit the bottom we had hit the bottom last month, in the month of June. So from now on, core inflation will probably start increasing, as we have already seen in the month of July. So this is going to be another feature, because we are going to end the year with core inflation back at about 4%. Number three, in terms of rate cutting actions, if we believe the RBI projections of inflation, remember it's 4.7 in Q3 and 4.6 in Q4. And they are very, very clear that unless they see that inflation, headline inflation, comes down to 4% on a durable basis, month after month for some period of time, they are not going to be in a hurry to cut rates. So while I hope that Mr. Joshi is right about a rate cut on the horizon, I would also side with Kanika that probably, and particularly given the fact that 7.2% GDP growth number that they have forecast, there is no really case for any rate cut. The reason that I brought in at the IIP number is that seems to suggest that overall demand, particularly in the informal sector, still remains relatively weak. And that might have an impact on core inflation, on the trajectory of core inflation that we see going forward.
Right. Right. And Mr. Joshi, what kind of a market's reaction can we expect tomorrow?
Don't talk about markets, so that's beyond my scope. Sorry.
All right. All right. So let's talk about the IIP data also that has come out, and let me just go through the data that has come out. In fact, IIP has risen less than what economists were in fact expecting for the month. It has risen 4.2. Estimated was 5.4%, and mining production rose 10.3% year on year. In fact, manufacturing production rose 2.6%, not as robust as it has been seen in the previous months. Meanwhile, electricity production rose 8.6%, capital goods production rose 2.4%, infrastructure goods rose 4.4%, and consumer durables rose 8.6%. Let me get in your perspective on how do you really see these numbers. Mr. Bhattacharya is not very happy with the print that has come in for IIP, but what is your assessment?
No, I think, you've been very comprehensive with the numbers. So definitely. So one part that is a bit surprising for me is the consumer durables number. So we had expected that to a certain extent because the sales of cars and two-wheelers that we have seen, but not this high. So that's number one. The second part is on the capital goods side. We had expected a low number because remember, government capex has been very, very particularly central capex because of the elections that were going on. So there's been very little spending on government capex. That should begin to pick up, and that will take capital goods up. But overall, all the other numbers, steel, cement, etc., that we had seen in the core sector numbers, those remain weak. So to that extent, my senses, and particularly consumer non-durables, that's another number that I don't have the number with me, the consumer non-durable numbers, and that a little bit of pharma changes that, influences that to a certain extent. But to the extent that particularly manufacturing remains weak, as you say, about 2%. So that, to my mind, is a little bit of a worrying trend. Although again, even in the IIP, there was a little bit of a base effect of the last June number to that extent. But to my mind, given the numbers that we are seeing, the high frequency indicators, etc., industrial production, manufacturing still remains relatively moderate, if not weak.
All right. Thank you very much on that note, ladies and gentlemen. Those are some of the numbers that we're getting to you as far as the month of July is concerned. The combined inflation has moderated. Food inflation has moderated. IIP number has also come down, but we'll need to watch out for how the next few months really pan out for inflation before the RBI really decides to take that much awaited rate cut on that.
If you like this video, then like, share and subscribe to ET Now.